All right, so I got a little game of this. It's just smash or trash.
Okay.
And this is going to lead us into our conversation. So, smash or trash, Robinhood and app-based investing.
Could go either way. It's look, those are tools. Uh, let's say one man's smash is another man's trash.
I
How
love
about
it.
that?
That's perfect. And we're going to talk more about that because I think there are two perspectives, and it's when you answer that question, you almost got to decide which angle you're looking at.
That's
If
right.
you're talking about putting your life savings, no, Robinhood's probably not the right place to do it. But if you're maybe learning a little bit about what the stock market
Sure.
is doing, then maybe it is good. So, well, that leads into the next one: smash or trash, day trading from your phone.
Trash.
Trash. Fractional shares and micro investing apps.
Smash.
Smash. All right. I like the fractional shares um, for my kids, and this is probably horrible. I don't know, but I don't have a lot of apps on my kid's phone, but I do have Cash App,
Mm-hmm.
and I put $20 every week will go to Nvidia. $20 will go to, and his portfolio has outperformed mine like crazy because he was in Take Two.
Yeah.
Um, I think AMD, Palantir, just a lot of things that I thought, but he holds his, and it just I don't allow him to touch it, but I want him to see it.
Sure.
And that's something that I've established with him is like, hey, I want you to see how these move, and they are going to go down at some point, but we're not going to panic and get rid of them. We're just going to hold this until forever. And it's
Yeah.
in a weird app because it's Cash App, but at least it's worth learning. So, smash or trash meme stocks?
Trash.
Trash. uh, AI stocks, and you can answer that from a. It's hard to say trash on Nvidia. We'd call an AI stock. Um, let's just say the entire group of. Is this something that is definitely going to continue? Or are we anywhere near some people getting exposed, whether it's the company or the people investing in it?
Yeah. I think the securities themselves are probably vulnerable. I think the technology itself is a smash. I think the performance of the sector going forward could be trash.
Interesting. All right, dividend investing. That's a classic strategy. Smash or trash.
I'm smashing that.
All right. Let's talk about real estate. Owning rental property, smash or trash. Is that part
Yeah,
of what a financial planner does as well? Whether you're
sure.
advising them to that, I'm sure you refer to real estate agents for that part. But
Yeah, listen, having real estate as part of their portfolio is completely normal, and you know everything in moderation, right? And so having income producing properties, I think, is definitely a smash as a general rule.
what about Airbnb investing?
So again, there can be seasons where that works. I'm going to say from this point forward, uh, could be trash.
I agree. I think that was easier when you bought at. I mean, you think on an investment property, you could have gotten a 3.5% investment rate on a $250,000 house, but now that house is 600,000 at 7.5%.
Yeah,
That's kind of hard
the math
to
isn't going to
cash
work
flow.
out. Yeah.
Exactly. I love this one because we actually talked to customers about this. What is your opinion? Smash or trash paying your mortgage off early?
Depends what your rate is. If your rate is 3.5 or lower, which maybe you originated 2017 through 21, I'm going to say trash.
Don't
If
pay it
you
off.
don't pay it off, if you still have a low rate.
Yeah. There's a whole book that I can't remember the name. It's on my bookshelf and I never read it, but I read the Cliff Notes that just talked about same thing you're thinking is if your rate's 3.5%, but you can make 7 in the market, why would you ever pay it off? You have the ability to pay it off. As long as you have the money sitting over here to pay it off,
Yeah.
why would you pay it off?
So a lot of times we'll have discussions with clients about that and understand that the math is going to say one thing, but your emotions may say the other. And in that scenario, in almost every case, the math is going to tell you you should not pay it off keep the money that you could pay it off with invested, because the compounding of that growth over time, you're going to have so much more capital. But if emotionally what brings you peace is not having to make a payment, period, then you know what? You may still say that's the right decision for you, even though the math would tell you that it's your next best choice. It still could be the right choice for you.
That's awesome. That's a financial planner right there, because I believe, oddly, I think I have a different book on the same bookshelf that talks about that. Is if being free and clear gives you peace of mind, is there a price you would pay for that? And the answer for most people, especially aging,
Is
is
absolutely.
yes, definitely peace of mind. I don't want a mortgage. I don't want that debt lingering over. Not no, because then you're worrying if the market crashes, if am I going to be able to get it out? Anything. So, I love that. Cryptocurrency, smash or trash?
Trash.
Trash. The whole thing.
I would say probably with the exception of Bitcoin and maybe Ethereum, uh, the it's an unregulated space. I think that there is some utility value to the blockchain, um, but I'm going to say as a general rule for most cryptos that are launched, they they go into a bubble and burst and go back to
Yeah.
zero. I'm saying trash.
Yeah. Well, I think Fartcoin is down 95% today.
Yeah, it doesn't.
Not just in one day, but from the high. I
Yeah.
thought that was funny. I know your stock market TV people are all Solana.
Yep, Solana. I guess maybe you include that with the Bitcoin and Ethereum, and I think Solana. Well, I'm not a crypto guy, but I think it's kind of I think it's kind of the infrastructure behind a lot of the tokens now, and maybe that's what gives it some support. Um, but as a general rule, I'm going to say crypto is trash. I think it has hurt more people than it's helped.
I agree. All right. Gold, precious metal, smash or trash?
Um, I would say in the long run, smash for sure.
Okay. Electric vehicles. This is a little off, but I mean, there's a whole, with Tesla, Rivian's kind of that hopefully close second.
Yep.
Electric vehicles, is that something of the future, or is that going to go away?
I don't think it's going to go away. I think it's a consumer preference item. What's going to be interesting is as we get more electrification, whether that's the whether it's the data centers that get built, there's going to be a large strain on the electric grid. It needs to be modernized and upgraded. And so, if electricity prices all of a sudden soar substantially,
Yeah.
is that going to put the cost of owning one of these? Now it's maybe not going to be as beneficial. And at the end of the day, I think to a large extent, it's been debunked that they're necessarily better for the environment, um, because a lot of the rare earth minerals that they require, they may not be harvested here in the United States, so it may be okay for the environment here, but where they're harvested, it's devastating uh, for the ecology of that region. Um, and then the wear that it places on the roads, the tires that have to get replaced, it's not necessarily a greener option. You may get to ride in the HOV lane, but that doesn't mean you're doing the environment any favors on balance.
Yes. So when you talked about electricity, I have a friend that his biggest concern was with all these data centers was the electricity. That it takes those nuclear power plants or whatever take 3 years minimum to build, yet they're doing data centers over and over and over, and there's a legitimate fear that we could actually run out of power. And that didn't make sense to me. I don't understand it, or if it's just a exaggeration, but
No, I think it is a legitimate concern, and considering the fact that the last nuclear power plant that we built in this country took 20 years to complete,
oh wow.
the fact that they think that they can build many of them that they need in 2, 3, 4 years, I think is probably a little rose-colored glasses,
Wow.
to be kind.
Self-driving cars and autonomous tech,
Uh,
robots and
Smash.
smash. I agree. I fear it, but I love it at the same time.
Yeah.
I
You
don't
know,
know how you control robots. I just, if
yeah.
you're
I think
learning,
about from like an autonomous driving standpoint. Um, I'd my car now, it has some features where it keeps you in between the lines to help you maintain certain speed. I personally would probably be reluctant to get into like the full self-driving, but when I think about my kids and the fact that the kids of today, they may never have to learn how to drive a car,
uh,
which is bizarre to think about. And I would want them to learn how to drive a car and know how to operate one. But as a parent at the same time, if I could think, look, if they need to go somewhere and they have the ability to use full self driving and it's going to be safer and they're going to be
uh,
less prone to an accident, I want that for them.
yeah. I mean, it started with kids didn't have to learn how to ride a horse, and then they
Yep.
didn't have to learn how to drive a standard
Yeah.
stick
Stick
shift,
shift. Yeah.
and so now they don't even
Yeah.
have to
Maybe
learn to
this is the
drive at all.
progression. This is
Yeah.
the progression.
All right, let's do some strategy smash or trash.
Yep.
These should be easy for you. Timing the market, smash or trash.
Trash.
Holding all your cash, waiting for the market to crash.
Also trash.
Financial advice from social media influencers.
Mixed bag. Right.
Really?
Can you? Yeah. I mean, I've met some really good people through internet platforms, but there is also an immense amount of bad information out there. And so you got to be able to judge what you're looking at. So you can learn a lot of really good things. You can also learn some not good things or not true things. So you've got to discern what you're looking at.
Yeah. Well, I'd say some people can teach baseball, but they have no idea how to play.
Yeah.
So, but there is a lot of good information, I guess, out there. I guess it depends on the strategy too, whether you're day trading or investing or long term. So, well, let's dive a little bit in there. So, what is your impression of if you hear about a young person or your children? Your children are pretty young still.
They are, yeah.
Um,
11, 9, and 7.
okay, so when they're 14 and they're
Yep.
on the Robinhood app, what is going to be your impression of a 14-year-old on a Robinhood app? What's your impression of a 22-year-old on a Robinhood app?
Yeah, so clearly you would hope that the 22-year-old is more mature than the 14-year-old. And again, I don't think there's necessarily a problem with the platforms themselves because they give you access to essentially the same thing that you would get through a traditional brokerage platform. You can still go in there and buy, sell securities, um, but it's are you in your right mind when you're buying and selling if you're that close to it. And I think that the apps, they promote maybe a little too much emotion. um, and I think for the younger generation, I think they probably see using the apps, even though they've got convenient access, I think they probably tend to maybe gamble a little more.
Yeah.
They speculate
And
versus
they seem
saying,
to be blending that. If you look at Robinhood, right below whatever stocks you own is their gambling. What do they call it? They don't call it gambling. They call it whatever it is. I mean, you can bet on football
yeah,
right
yeah,
there
yeah,
on
yeah,
your
yeah,
Robinhood app. You can bet on the election.
sure,
You can bet on weather, like right
yep.
there on Robinhood. So it's really blending.
And I think that's confusing
Yes.
for these folks that are getting exposed to the markets. And ultimately, I think that exposing young people to savings and investing is a good thing. You asked earlier about the fractional share thing, which I think is great because it allows you to establish some positions in things over time when you couldn't afford to buy a single share of a stock. I think that's great. But I think the confluence of I can invest and then I can also allocate some money to try to bet on the outcome of this game. And let's just say that I'm successful in picking the winner of that game and I make money as a result of it. If I'm conflating that both of these are going to have maybe similar levels of success, and over time they're likely not going to.
Yeah. Um, I think buying options is probably makes it a lot harder, because if kids were gambling but only purchasing actual stock, I think they're not going to do as bad as if options, most of them expire worthless. So they're
Yeah,
losing a
yeah.
lot of money.
I mean, most of the kids out there are YOLOing, right?
Yeah.
And they're trying to hit something big, and it kind of goes back to slow and steady can win the race. You don't need to be YOLOing all the time.
Right. So there's a good. So that goes to my next question. Where do you recommend young people allocate their money? And let's talk about a 14-year-old that's saving their birthday money, and a 22-year-old that just got out of college, and they might have a little extra money. They put their money in their 401k,
Yeah,
but they might have an extra $500 a month to
sure.
put somewhere. Where should those two people put their money?
Yeah, I think that there's a couple ways that they could go about it. I think starting out with something like a diversified portfolio would be good. I mean, you can buy index strategies, ETFs, that are diversified portfolios that give you access to a bunch of different stocks, both stocks here in the United States, stocks abroad. Uh, if you decide that you want to buy a couple of individual stocks, I think that's okay. Um, but my concern is that most people, they tend, especially when they're starting out, they they tend to allocate to what's hot and what's new, and so that can work for them for some period of time, but it can also crash and burn.
Yeah.
So I'll say in the early days of my investing career, when I was in college, uh, the energy stocks were really hot, and that was what was working. And so I had a little Ameritrade account that I traded at the time, and I ended up with with some of those. And when the financial crisis came, I mean, they were not spared.
Yeah.
And so I would just worry that that kids, as they're getting acclimated to investing, I would rather them get acclimated with something that's a little broader, a little more diversified, than just buying a number of AI stocks,
Right.
as an example.
Well, one thing that I read a long time ago, and I've passed on when I talk about what stocks I'm letting my kid choose, is some advice that was given to me was, if you're choosing the stocks, buy stocks that you like and you believe in.
Mm-hmm.
So if you don't believe in cigarettes, then don't buy
Sure.
things that you believe in. If you don't drink Coke, don't buy Coke.
Yeah.
And things that you're going to pay attention to, because you're more likely to notice trends if you believe in it, like it, and you see it more often. If you see that, you're going to notice who was the company that just had the ad that went half crazy, or Target with their ups and downs, with their
Sure.
wokeness, all
Yeah,
that
yeah,
stuff.
yeah.
So I thought that was good advice. That's what I've passed.
So the one thing I would say is, I think that in general is good advice, but we also have to make sure, to me, successful investing over time is also about not being married to an individual position. So, when we say you need to invest in something you believe in, uh, I want you to have some conviction around what you're buying, and maybe have some attachment to, I like this area of the market because it appeals to me, and maybe I'm going to study it. But don't let that don't let that allure or attachment that you have to that space marry you to that space, where you'll willingly discount when things do change, because successful investing over time, it's about participating in the up moves, but it's also about protecting your capital
Yeah.
in drawdowns. And so don't just blindly ride something down simply because you believe in it.
Yeah. I mean, I feel like, and again, that's not what I do, nor am I any good at it, but I feel like Starbucks might be a good example of that, because kids love Starbucks,
Yep.
and they might drink it and still love it. But I think it's had its run, and now when they've had their cracks, I feel like just based on the number of coffee shops in Fayette and Coweta County, that
Yeah.
they've opened the door for a lot of competition. So I don't know that they're going to have another big run.
But at the same time, uh, we need to make sure that we don't let our opinions and biases keep us out of making some good investments in some things, because at the end of the day, these are all just letters. They're just
Yeah.
tickers. What we want to do is find ones that are, at good levels where we can buy them because we think that they're going to go up. And then when they get to a certain price, we're going to be ready to sell out and move on.
So that perfect example of bias, because I go to Starbucks. I don't like Starbucks. Like, I don't think the coffee tastes that good. And so I used my bias just now to think that stock's probably worthless at this point.
It's already
And
it's already taken a bath, right?
yeah.
So maybe a lot of it has been priced in. But I'll tell you so I'll give you just another example, just kind of rewinding, of where even the most sophisticated investors would go wrong. So back in 2020, so energy prices had gotten hammered. There was a point in time where the May crude oil contract actually settled at a negative price. It settled at negative $38, and the energy sector was just a complete washout. There were a lot of bankruptcies in that space. ExxonMobil had been a member of the Dow Jones Industrial Average for decades. Right, it's one of the original members, Standard Oil, and but the folks who put the Dow Jones Index together, they booted ExxonMobil out of the index when it was about $35 a share and replaced it with Salesforce. And I think a lot of that was due to maybe some pressure they were getting from investors. The space hadn't done too well. It didn't seem like energy prices were going to be coming back anytime soon. And so they kick Exxon out, they put Salesforce in. And wouldn't you know that since they did that, ExxonMobil has tripled in value and Salesforce hasn't really gone anywhere.
Yeah.
And so that's an example of sometimes where your biases can lead you to maybe take something out after the damage has happened, but we don't necessarily see how things could get better, but they did for a company like Exxon.
Awesome. Well, I only got a couple more questions. One is for an established investor, somebody that maybe just left their job and now they have a 401k that needs to be rolled over. Maybe they're 35 and have done very well, and they've saved on the side. What advice do you have to them for choosing a financial planner, I guess? Because I know you've got Big Box, Charles Stanley, or Charles Schwab. Is Charles Stanley? Oh, that's the preacher. That's a preacher.
Yeah, God bless.
He would
God
probably
bless
took
him.
a,
God
yes,
rest
he
his
did
soul.
pass away.
Yeah.
Do you consider y'all a boutique firm? Is that?
Yeah. But I would say especially for the affluent millennials today, and that's a growing group. Uh, I see a couple things there. That first of all, those folks, they want access, they want visibility, so they like things like the apps to where they can peer in and look into their account, see what they're doing. But they want some personal connection. They want an advisor who understands them. They are maybe less risk averse than their parents because they're still younger. They have a longer time horizon to go. But what I've also seen is that a lot of those folks, they don't want to make some of the same mistakes that they saw their parents make, right? They would have been kids when their parents went through the dot-com bubble, the financial crisis. And so they're also trying to be a little more cautious and say, well, I know that I don't want to go through that same thing. And so what can I do to set myself up to be successful? But also, I think I want to do it a little differently because I want to learn from mom and dad's mistakes.
Perfect. Well, give some advice to a kid. Let's say it's your child, and they're 25, you're no longer in the business, and you're out of state. How do they pick a financial planner?
Yeah, so we actually have something on our website that is, how do you select a financial advisor? We did an entire podcast on this, and uh, you want to make sure that it's somebody first and foremost that you trust, and that they're going to be transparent with you. You need to be able to define what type of an engagement is that person going to have with you. Or are they just going to do some financial planning? They're going to do some analysis and tell you this is the way that you need to position and title your assets, and this is how much risk you need to take. And you may pay them a fee for doing that work, but they're not going to manage the money for you. You can go and do that on your own or choose somebody else. Um, are they going to do everything for you? Is it going to be a comprehensive relationship where they're doing ongoing planning? They're also managing the money. Um, but as I say, when you are trying to build a relationship with a financial advisor, there are, uh, there are three things that I believe a financial advisor needs to have a good bound relationship with their client. The first is you've got to focus on